According to some, Canada is sitting on the biggest real estate bubble of all time. Not just in Canadian history, but in the history of the world in general. And not only that, they're pointing to the high debt levels that could lead to a very quick unraveling of the Canadian real estate market. And more specifically, what they're looking at is the Toronto real estate market, which according to UBS is the most inflated real estate market in the world. And as a Canadian, you probably know that when something's bad for Toronto, it's bad for everybody. And in today's video, I'm going to talk about exactly what the problems are in the Toronto real estate market and what you need to do in order to prepare for that eventual pop, assuming that it is eventual and that it's actually going to happen, because there is a possibility, which I'll explain in a minute, that it may not come to fruition. But before we get into it, my name is Nolan Matthias, and this is the place for Canadian real estate news. So if that's something you're looking for, this is the place for you. So do me a favor, hit that subscribe button and hit the like button so more people like you can see this video. And if you found yourself here and you're wondering, hey, why aren't I subscribed? I've already subscribed to Nolan's channel. Well, this is a new channel dedicated to the Canadian real estate market. My other channel still exists, but if you aren't subscribed to this one, make sure you hit that subscribe button. Okay, so let's get into it. Let's discuss what's going on with the Canadian real estate market and the Toronto real estate market in general, because there is this possibility that the Toronto real estate market bubble could pop, and it could be worse than the 2007 financial crisis in the US. Yes, that is what some are saying, is that this could be the single biggest deleveraging, I'll explain what that means in a second, in history. And let's be clear here. What a deleveraging means is that debt levels get too high, and as a result, it has to unravel. And eventually that means that an economy goes to, well, hell in a handbasket. We all saw that in 2008. And Canada fared pretty well during that time. However, the one downfall of the fact that Canada survived without too many issues in 2008 is the fact that we didn't have the reset that a lot of the other global countries had. And that's leading to now what could be a delayed process of getting this bubble to pop. So I want to jump in. I want to show you the headlines here. So this is the most recent article from BNN Bloomberg. There wasn't any new reports or anything. Some strategists just came out and said, hey, we think Toronto is the biggest bubble in the world. And this wasn't really news because in October of last year, a report from UBS had already pointed this out. But what makes this interesting is that this particular article talks about the amount of leverage in the Canadian real estate market and the amount of leverage in general, the debt to loan ratios in the country. And that is becoming problematic as it gets higher and higher and higher. It's always been high. I remember in 2006 being at conferences and them talking about how high the debt levels were, but now it's at an even greater number. And by the way, back in 2006, they were saying this is unsustainable, and I'll show you what the numbers were back then. And it continued to climb and climb. But the problem here is that Canada's population, at least 20% of it, resides in two different cities, Toronto and Vancouver. And as you can see from the UBS report last year, we've got two cities that have blaring red bubbles, Toronto and Vancouver. Now, Toronto is ranked as the #1 biggest bubble according to UBS in the world. Vancouver is only number 6. But if either of one of these bubbles were to pop, it could be catastrophic for the Canadian economy. Because as I just mentioned, a pretty significant amount of Canada's population lives in these two areas. Now, this map with respect to population density doesn't really do this problem justice because it doesn't really show the fact that Vancouver and Toronto have a pretty significant amount of the Canadian population. This map kind of makes it look based on population density, like Alberta and Saskatchewan have a pretty significant amount because there are very large areas like Edmonton and Red Deer and Calgary that are measured in relative comparison to significantly smaller areas like the districts in Toronto and around Toronto. So the problem here becomes the fact that we've got this massive population in Toronto and Vancouver, and that they're perceived to be in this bubble, and sometimes that can become a self-fulfilling prophecy. And by the way, there's lots of data out there to suggest that this could be problematic, especially when you consider the fact that Canada's debt-to-income ratio is now at 184%. So in other words, the average Canadian now carries 184% debt relative to their disposable income. So in other words, if they've got $100,000 in income, they've got $184,000 in debt. Now, this includes mortgage debt as well. And as you can see, with higher real estate prices and two massive real estate bubbles, of course, we've got mortgage debt that's gone up quite significantly. Now, what's interesting is that consumer debt hasn't risen to the same extent that mortgage debt has risen, but consumer debt is starting to increase as the impact of higher inflation is starting to be felt. And that is also becoming a problem. Now, combine all that, the high debt ratios, with the fact that higher interest rates are now putting the Canadian economy in a position where the actual growth is starting to decline and the pain of interest rate hikes are starting to be felt, especially with corporations, which is eventually going to lead to higher unemployment levels. And that will eventually lead to a circumstance where people may not be able to make their actual payments because instead of having not enough money, they're going to have no money at all to make those payments. And that could be the unraveling of the Canadian real estate bubble problem. Now, that being said, all of the rules, all of the things that have been done to make it easier to make mortgage payments, so increasing amortizations and assistance programs, are also kicking the can further down the road. And if interest rates don't start to come down when 5-year fixed mortgages start to renew in the coming 2 or 3 years, well, we could find ourselves in a very, very bad position. Now, that being said, if interest rates do come down, people start to renew at the mortgage payments that are similar to what they had previously, well, this could all be for naught, and we may find ourselves in a situation where, hey, everything's okay. Depends how soft of a landing the Bank of Canada can create with respect to inflation and higher interest rates. And if they screw this up, and let's call a spade here, they haven't done the best job of managing it over the last couple of years, well, it could be catastrophic for a lot of people. So then the question becomes, what can you do as an individual in order to prepare for this? And I'm going to give you some hard truths right now. If you have a property that doesn't feel like it's affordable, you feel like your payments are too high, your rent's too high, probably the number one thing that you can do to put yourself in a better position, just in case there's a real estate market that pops in Canada, is to downsize right now. Do it while the market is hot. Do it while there's an opportunity to actually sell your property at a profit and move into a smaller one, putting some of the cash away and lowering your debt obligations. But if you're waiting for the actual bad things to happen before you make changes, it is going to be too late. And I cannot emphasize this enough. If you are living at the end of your means right now, at least financially, well, you need to be making the changes now instead of waiting for it to get worse and worse and worse. And that's going to be the difference between the people who are comfortable financially when this whole thing pops, if it pops, and the people who aren't, the people who don't survive financially, who find themselves in bankruptcies or foreclosures or everything else. And this isn't just planning that should be done when it's possible that there might be a bubble burst. This is planning that needs to be done for everybody at all times. You should always be in a position where your net worth is growing, your liquid assets are growing, and where you're putting away cash for retirement that can also be used in the event of an emergency fund. Sorry, I mean in the event of an emergency. Now, that being said, let's talk about emergency funds because most people don't have them. The first thing that you need to do if you don't have one right now is put $1,000 away into a savings account that is there not to be touched unless you absolutely need it. And this is a Dave Ramsey tool. It's not about how much $1,000 is relative to your income or your savings. It's about the fact that $1,000 is achievable for most people. You need to do that right now. Then you need to start paying down debt if you have it. And then you need to start building an even bigger emergency fund and get in the habit of spending less than you make. 20% of your income, especially in times like this, needs to be put away for other things. And I know what you're thinking. You're thinking things are too expensive now. I can't do that. Well, take that as a sign and hear me on this. Take that as a sign. If 20% is not possible for you right now, it's because you are already living beyond your means and you need to make a lifestyle adjustment. And that could be spending less. It could also be getting a part-time job and working more or trying to find other ways to increase your income. But regardless, you don't want to be one of those who gets left behind if and when something bad happens. And I don't think something bad is going to happen, but the opportunity for it to happen is definitely brewing. So be prepared and make sure if you have a mortgage, you watch this video right here that talks about the fact that some lenders may be trying not to renew mortgages in the future and what you need to do to prepare for that as well. And guess what? The suggestions are pretty similar.